Impact investing is very simple. Impact investing is making money while doing good. Venture capital movement started in 1950s in the US. The easiest way to understand is that venture capital takes concept risks and private equity growth capital takes execution risks. We are really living in a time which is once in a lifetime. It's a golden opportunity.
What is impact investing? What's private equity?
Impact investing is very simple. Impact investing is making money while doing good. Right? So the whole idea is that you do not just want financial returns on your investments, as every investor does, but at the same time you also want to make a better society, contribute to a better society. Now, whether that happens in terms of serving the bottom of the pyramid, whether that happens in terms of having some kind of social outcomes or economic outcomes or environmental outcomes, that's the idea of impact investing. And I think every good investor needs to be a student of history. So I'm actually just going to take you back a little bit to talk about the history of financial engineering, talk about the history of private equity and venture capital, because we hear so many of these loose terms, this bootstrap, Series A, Series B, Series D, and very often we don't usually understand what this means. At least I did not until a few years ago, right? So if you go back, a few hundred years ago, the first piece of financial engineering, we don't even call it financial engineering anymore, was actually the birth of a common stock, which happened back in 1600s when the Dutch East India Company issued the common stock for the first time to get general public to buy into the company to finance its operations. Because before that, you could not do that. You either had to go to banks or to high net worth individuals to raise financings. For the first time, they found a way to go to the common public. If you come back to the history of venture capital and private equity, although we talk about venture capital and private equity in the same breath today, this wasn't the case. The venture capital movement started in 1950s in the US, where with the semiconductor industry, where some investors found that this is up and growing area, and what they could do is they could actually hand the growth. So if a business would take, say, 20 years to get to a first million, can you make that process faster? And how could you do that? You would give them capital to go out, really kill all the competition or innovate at a pace that's never been seen before, and grow that business very, very fast. So that happened in the 50s and 60s, and then that's how the venture capital industry came to be. Private equity industry, on the other hand, had a different origin story. What they saw was, close to, I would say, more in the 70s, is they saw that there were companies that were built, say, 70 years ago or 100 years ago, massive companies now. But, usually in general financial terms, we say that the sum is greater than its parts. But they saw that the sum was actually less than its parts. They thought if they could come in and restructure the company and sell it into its pieces, they could actually make more money. Or they would come in and restructure the company, make it more operationally efficient and make more money. So that was VC, this PE. And then throughout, I would say, during the dot-com bubble, so in the 90s, what happened is you got companies which are venture capital backed, and they want to increase their size, they want to increase their marketability. So what they would do at that point is they would look for more capital, and they wouldn't want to go to the public markets at that point. Public markets regulated, you don't know, you still don't have enough, you're not making enough money that will value. So that's when the bridge of private equity growth capital came in, and that's when it became the full spectrum of from venture capital to private equity growth to private equity buyout. Coming back to your question on the opportunity in India, I think what we're seeing in India currently is an opportunity that's never been seen before. I think we are really living in a time which is once in a lifetime. It's a golden opportunity. It's a ticket that some of us have won in terms of lottery of when we were born and which India we were born. And people often talk about the demographic dividend of India. I'm usually not the biggest believer in demographic dividend, because India has that demographic dividend for a long time. So you look at the last 75 years, India has always been a young country. So what has changed? A few things that have changed fundamentally. One, I think, is a young Indian today is very different from a young Indian even 30 years ago.
Yeah,
I think a young Indian today is a lot more confident. And maybe, you are talking to so many young people, you'll see that, there's no fear.
yes,
There's no fear at all. You go out, you talk to someone on an equal footing. And that really helps. So, you can see that I'm an avid watcher of cricket. So you can see that in Indian cricket team today versus, the cricket team even 20, 25 years ago. So it's one thing. Second is capital coming into India. So the longest time, India has been a capital-starved market. We have not had much foreign direct investment. You hear of terms like unicorns and unicorns, but India's first unicorn was actually less than 15 years ago.
Mm-hmm.
And today we're talking about 100 unicorns. So it's not a very old story. It's a very young story. And that's driven by the fact that there's a lot of capital coming into the country. And third is that entrepreneurial spirit. And that again comes from the fact that for the longest time in India, people wanted to do jobs. Okay, and I'll say this in Hindi, but sarkari naukri, IAS kar lo, right? Multinational mein naukri lag gayi. That used to be the big thing in India throughout 60s, 70s, 80s, and 90s. Doing, I know from people that it would be impossible to get married. If you're a guy who has a business in the 90s, you wouldn't get someone to get married to you. But today it's a completely different story. People want ESOPs. The fact that you're seeing this on things like Shark Tank, for example, that people are talking about entrepreneurship in general parallel.
Yes.
How interesting this space has become.
Yes. So very well said, Kapil. I think a lot of our audience don't understand the difference between a venture capital and a private equity. So so you explained it very well. That venture capital is for this new startups which want money to take risk, and private equity is to restructure existing companies, because with age, any company becomes add some fat to the body. It's about coming in, cutting the fat, making it more lean and more performant. And in this middle space, we have this private equity growth capital, which is like, okay, you're not a startup anymore. You're a reasonably sized company, but you could still grow faster with money. So you've already proven the product market fit, but you can grow faster with money, and that's the private equity growth capital. So very well explained. And I also, go ahead.
I'm going to just add Vix here. I think the easiest way to understand is that venture capital takes concept risks, and private equity growth capital takes execution risks. That's the easiest way to understand. Your concept is proven, and now we are taking a bet whether your team will be able to execute this or not. At the venture stage, even the concept is not proven.
I'll probably add one thing, that at venture capital, there is a huge execution risk, but you don't have any execution history. You don't know whether anyone will be able to execute, because the concept is also unproven. But that is why the product market fit, that is why when VCs say, and I've been doing this for more than a decade, when VCs say, oh, we pay close attention to the team, we are backing the team. The real truth between the lines is you have nothing else to believe in at that point. You can only say, okay, if this guy has done something else before in life and I like him after my 5 or 10 meetings, then yeah, probably the concept is all right. Probably he'll be able to he or she will be able to do it. But there is a huge execution risk in venture capital, and which is where the team importance comes in.